Hi there, folks, and welcome to our Monday market review here at GoPro Trading Academy, being conducted by yours truly, Ian Giffen. And I would say that over the last few weeks, we've seen this continued retracement across many of the instruments that we trade, and the market taking something of a breather. As I mentioned before, it's quite possible that we're looking at the Northern Hemisphere holiday season kicking into full swing. So over the next couple of weeks, we might take it a little bit easy ourselves. But in any event, if you're getting value out of these sessions, then please do give us a thumbs up, and don't forget to subscribe to our channel and hit that notifications bell. And of course, keep an eye out on the activity inside the Forex Trader Facebook page. We are going to be announcing some additional training there soon. That being said as well, I hope you folks who were able to attend our workshop last week got really good value out of it. Remember, you folks on the VIP subscribers, you've got lifetime access to the recordings. So hopefully you've got the links for those. So make the most of it. We're also going to be following that up with some additional training in the Discord channel over the next week or so. So if you're not already signed up, as I say, make sure that you pop into the Forex Trader Facebook page and follow the page, because we're going to be announcing the times there. All right. So without further ado, let's have a look at the instruments. Euro not doing that much. You can see last week here, just a single inside bar, a bit of a low test as well. And daily telling the whole story. It's very flat at the moment, showing something of that dollar weakness, it has to be said, which is a little bit more visible here on the cable. With a deeper retracement last week, showing some additional strength on the part of the pound. And you can see how it's come up to the daily 55 EMA, tested it last week, busy retesting it right now, in fact. So looking to see what happens there. Right, dollar yen, and in fact, I'd say this is the number one theme really for last week, was some surprising strength coming out of the yen. Now you can see that at the moment we are still, in fact, in a retracement wave of a bullish trend on the weekly time frame. But last week's bearish impulse candle showing some real strength, very visible here on the daily time frame, with a significant breakout of the HTC channel on Thursday. So those folks who are trading the lower time frames, this is probably one of your favorite instruments to trade at the moment. And for those of you who attended our workshop last week, trading on those lower time frames, using advanced price action techniques and your WM patterns across multiple time frames, this is probably one of the best pairs for you to trade at the moment. Possibly the second best, I'd say. We'll look at the best in a minute. All right. So dollar Swiss on weekly time frame. There again, we're seeing the dollar weakness, but still very much inside of our HTC channel on the weekly. But on the daily, it is testing the support level over here. So interested to see if that dollar weakness continues through the course of this week. Because if it does, then certainly on this pair, we will have a breakout on the daily time frame. USD CAD, likewise, you can see here inside the channel, but a significant bearish candle. And here we do, in fact, and did get a bearish breakout. Now, it has to be said that after Wednesday last week, Thursday and Friday were pretty pathetic. They only made slightly lower lows. But nevertheless, it has succeeded in making this a bearish impulse wave outside of that channel and getting below that support level. So let's keep an eye on it. If that dollar weakness continues, then we will see some significant bearish action here. But that is a big proviso, given the fact that we are into this funny time of the year. All right, same thing on Aussie. That's really its US dollar weakness again, pushing this back deeper inside the HTC channel here on the weekly time frame and coming up to our the top of the HTC channel on daily. So not much, even though it's quite an extended bullish wave, this the day-to-day price action has been pretty pathetic, and that's better seen on the 4-hour time frame, where you can see very deep retracement. So as you guys know, that is a sign of weakness in a trend. We don't like to see our phase 2 retracement waves overlapping with each other. All right, so the Kiwi, similar kind of picture. In fact, even weaker last week. Let's have a look at the daily time frame. So we're outside of the channel, again testing that daily 55 EMA and today looks like it's making a break for it. Let's see if it can survive above that dynamic resistance level by the end of today. All right, so that's our majors and minors. Let's have a look at the yen crosses, and here you can see probably the best instrument to trade on the lower time frames at the moment being the euro yen. So coupling euro weakness with that yen strength, and you can see we've got a nice bearish breakout here on the daily time frame. So another one to keep an eye open between this, I'd say, and the USD JPY, both very tradable on the lower time frames, and definitely my favorites at the moment. Right, not so much because of that GBP strength coupled with yen strength. You can see that we're seeing more correlation between these, so not really tradable. That's the weekly time frame. Daily also not really stacking up too much, despite the fact that we got two bearish impulse candles showing us that the yen is definitely the strongest of those two over the last couple of days anyway. Swiss yen, likewise, we've seen that high now ringed. So this bullish trend on the weekly time frame now definitely over on that Swiss yen. We really made hay while the sun shone for us with the Swiss franc over the last few months. So we can't complain about that. That run having now definitely come to an end. You can see here on the daily time frame those trades that we were looking at before. It's really is over now. We've had a breakdown in cyclicity, and that last trade we got stopped out for a small winner. So nothing really important going there. That's all over for now. Inside that HTC channel, no valid patterns either. Right, CAD yen, again, also you'll see that yen strength creeping in here. This is not much to see here on the weekly time frame, but that high now being ringed, showing us that the market failed to break through that resistance level. And likewise, we've now got a breakdown in the sequentiality of this bullish cyclicity. So that's also the end of quite a long-term trend that we've had. And it's so much so that on the daily time frame, it's testing the support level at the bottom of our HTC channel. Right, Aussie yen, you'll see similar pictures here, maybe not quite as impressive inside of their channels. We're not touching these, so I'll just flip through them quickly. Kiwi yen, bit more significant bearish move last week, but again, just testing the bottom of our HTC channel. And today, in fact, also showing no real appetite for getting below that so far. Euro GBP, and again, this is really more, we noted that the pound is strong and the euro is weak, so we would expect to see some, well, certainly a bearish impulse candle on the weekly time frame, and we did have that despite the fact that there's nothing else to look at on the weekly time frame, but it did give us a bearish breakout on daily, and you'll see that Friday, it gave us a very nice retracement back to what was support and is now a resistance level. So those folks, well, I mean, the thing is, you can't really trade this as a daily impulse, unfortunately, mainly because our primary selection time frame criteria are not met on weekly. So daily is looking nice as a primary selection time frame if you wanted to trade this on something like an H4 impulse coming up. If you're looking for a hybrid, then I'm sure you've got your eyes peeled at the moment and looking for that breakdown in the bullish cyclicity, which we've actually got at the moment. So had you been willing to jump in on an aggressive class 3 M pattern here with that bearish engulfing impulse candle that came to an end not that long ago, just under 2 hours ago, then you would have shorted this market already. If you a little bit more cautious and waiting for that impulse setup, then just one more cycle to go for that. Euro Swiss still barreling south here on the weekly time frame. We spoke about this before. We got a very marginal retracement the week before, that high now being very much ringed as expected by last week's candle. So if you were looking for any kind of a setup to short this again, that bearish impulse candle on daily is something you probably would have jumped all over. What was that? Monday, Tuesday, Wednesday, Thursday? Actually, that was the previous week's Friday. I think we probably discussed this already last week. So you're into this trade. It's not going very fast, but nevertheless, it is still probably one of the best setups on the higher time frames at the moment, despite the fact that we don't really like the Euro Swiss. Euro CAD also showing a bearish trend here. Again, that's Euro weakness, not quite as impressive, but nevertheless, it's still valid. And you can see that the market has rolled over, given us a ringed high, but it's not really giving us much assurance that it's going to give us a bearish phase one here with last week's low test candle. And looking at that on the daily, you'll see that really it all happened on Thursday and Friday, with the market failing to break below the bottom of the HTC's channel. That support level holding true, which is a bit of a pity. I know some of you actually shorted the market with that bearish impulse candle, the breakdown of that bullish cyclicity, more of a hybrid setup, but and that's fine. And we all know that hybrids do have a lower success ratio, but when they go, they give us very big wins. All right, so Euro Aussie, again, Euro weakness creeping in here. Nothing that impressive, but this is a bearish trend on daily time frame. And again, we saw on Friday retracement back into that resistance level. Looks like it's rolling over again now. So anyone who shorted that previously with that bearish impulse, well, again, this isn't really an execution time frame for us, with the selection time frame looking like that. So this would be really more your primary selection time frame if you wanted to short this market, and then use, let's say, H4 to execute. And there you have it. And you can see that this bullish cyclicity, being that phase 2, has pretty much come to an end as well in that same time period, which is just on about 2 hours ago. So I'm sure many of you shorted that market as well. Similar picture on Euro NZD, maybe, well, certainly a lot messier. So you'd probably use the Aussie and not this one. Okay, so that's our Euro crosses. Let's have a look at the cable. We know GBP is showing strength. GBP against the Swiss franc, maybe not so much. This is it's still technically a bearish wave, but it's very messy. We've had multiple inside bars, and even though the price might have peaked a little bit lower over the last couple of weeks, we haven't yet got any indication that we're into a bullish wave as yet. So it's very, very flat, has been for about a month. Enough said on that one. GBP CAD, maybe a little bit more interesting, but only marginally so. But last week closing back inside HTC channel, so not interested in that either. Likewise, GBP Aussie, all of this is pretty pathetic. I won't spend any more time on him. GBP NZD, likewise, very, very flat, as we've noted before, which takes us into our other crosses. And again, not much of interest here at all. Very, very flat on both the weekly and daily time frames. Aussie Swiss still in that retracement wave, and on the daily time frame, flat as a pancake. So we're really not interested in that at all. Aussie Cad, looking a little bit more interesting. We did have a breakout last week on daily with a retracement, but it did come back and looked like it wanted to close back inside of the channel. Worth noting, though, that once we got that outside close there, we have not had another inside close. So at the moment, if this ends up being C anywhere around here, it is an outside C close. So this is quite remarkably bullish, considering the messy picture that we've got on so many of the other instruments. Aussie Kiwi on weekly time frame still failing really to get above that resistance level. Tried last week and failed. That was the attempt. Here on daily, you can see that it got outside of the daily HTC channel, but there's a more significant resistance level just above that it's failing to break through. So another one that's not really on our radar at all. Right, the last two of our currency pairs, we're looking at Kiwi Swiss here, looking still quite bearish, with last week's candle ringing that high. So this is certainly one where I know folks would be looking potentially for a shorting opportunity using something like the daily impulse. But if you look here on the daily time frame, it is also very, very flat. So another example of why this time of year perhaps is a good time to go and do something else. And Kiwi Cad even more so. So despite the fact that we are technically in a trend, it's very weak. And on the daily time frame, it's actually retracing above the top of the HTC channel. It looks like it's trying to close above it again. But this is very, very weak price action, with all of the retracements really coming back the full distance of the preceding impulse wave. Right, so those are our currency pairs. Let's have a quick look at gold, which is dropping down to daily. You'll see that it's been pretty strong. This retracement, we had a bearish trend on gold beforehand on this time frame, but definitely back into something of a bullish trend, even though technically speaking, we are still very much inside of that preceding HTC channel. We are outside of the LPO, very much outside of it. So if you're looking at that, then definitely a bullish trend here for us, showing again that US dollar weakness. So keep an eye out for that as well on your pattern trading. Right, so the indices also showing a bullish tendency here. So you'll notice we had quite a strong impulse candle for the second week in a row here on the Dow Jones, giving us a nice class 1W pattern. I know folks were looking to go long on this, and you probably took the opportunity to do that with that impulse candle last week, with the close of last week, Wednesday's candle. If you were looking, however, on the S&P 500, noting as well that we are very much inside of the channel still on the weekly time frame, so you might not be using that as your primary selection time frame, in which case you may well be trading on the lower time frames, such as using your H4 impulse and hybrid approach. So just as visible here on S&P 500, a bit more significant of a retracement on the NASDAQ. You'll see an inside close here showing something what was a bit surprising, because the NASDAQ normally is ahead of the others. But if anything, that gives us an indication that there is still some weakness in this move. But we're not predicting. Just take advantage of what the market gives you. Right, and that leaves us with oil, where we saw the preceding trend on daily come to an end. Really, it's just the price finding support here on the weekly time frame. So not a big surprise. Looks like this low may well be ringed by the end of the week, although it's still very much early days. But here you can see the cyclicity on the daily time frame having broken down, and it is once again, well, at least it's in a tight range. It might not be bullish, but certainly the bearish cyclicity has come to an end on oil. Right, which leaves us, last but not least, with Bitcoin still showing slight bullish tendencies. Again, I'd say that that's probably more the US dollar weakness more than anything else. But let's wait and see. So only time will tell. All right, folks, so that's pretty much it. As I mentioned, it would probably be quite a quick trot through the instruments today, because there's not that much happening across the board. But hopefully you found this useful. And if you have, please don't forget to subscribe and hit the notifications bell if you're watching this on YouTube. And of course, on Facebook, keep an eye on the Forex Trader Facebook page. We've got some interesting lower time frame training coming up to back up that workshop. So make sure that you are following that. All right, folks. So apart from that, that's it from me. I hope you have a great week's trading. Bye for now.